Hello and welcome to the market update for Tuesday, February the 15th. I'm actually doing this later Monday night. As I mentioned last week, I'm on a kind of a working vacation this week, and so I'm going to be, instead of doing the live classes, I'm going to be doing recordings. And just the way my schedule is, tomorrow I'm not going to be able to get it done during market hours. So just keep that in mind, that this is based on the close from Monday, this analysis I'm doing today. And so if you're viewing this tomorrow during the live markets, when the recording should be available, should be posted, just keep in mind that the charts could look a little bit different, or the movements could be a little bit different based on the fact that this was done the night before. But real quickly on the directional alerts, we're looking at, again, a market that's a little bit oversold. Momentum is down in the sell area, not to the extreme, but it's still down in that sell area. Breadth, I still don't have the data there on breadth, but it's kind of the same thing in the kind of the same area. And then sentiment is backed off a little bit from that extreme area. It's in kind of the high area. It's still a lot of a high level of complacency in the market. Not a lot of fear in the market. Despite some of the selling we saw on Friday. The buy-sell ratios, they were kind of moving in the direction, with the last update, that they were moving in the direction of the buys outpacing the sells, but that has since kind of reversed. Now the sells are outpacing buys. A lot of this from Friday's sell-off that we had, and the second sentiment indicator here is right in the middle, so there's no extreme level there to worry about. Now, getting to the charts, this update's not going to be as long as some of the others. I'm just kind of doing kind of a little bit of a brief update here. But let's get to the market update here. Today, I would characterize Monday's price action as being very indecisive. Last week we talked about kind of that critical area of that January 10th low. See if I can draw a little bit of a straighter line here. Extend that out. We had the breakout area right here, and again we hit a couple weeks ago. We hit this on a Wednesday. Pulled back on a Thursday. Last Wednesday, we hit this area again, pulled back on Thursday. And then Friday, of course, we had the big sell-off. And the big sell-off took place right when that breaking news hit that a Russian invasion of Ukraine was imminent. And we saw the market kind of freak out a little bit or sell off a little bit. Now, today, there's still the rumors out there. News reports were that the U.S. government wanted all U.S. citizens to leave the country. They closed the embassy and all that kind of stuff. So again, it's all pointing towards an imminent attack by Russia. But yet the market is a little bit indecisive on that. And there are also some stories of potential negotiations going on, talks going on. One thing to keep in mind is that with the Olympics going on, there is a long-standing tradition of ceasefires and putting off battles and things like that during the Olympics. So it really is unlikely that Russia would invade Ukraine while the Olympics are still going on. We're in the last week of the Olympics, so later this week, that could be something to consider. Also, the Russian president is pretty friendly with the Chinese president. I don't think he'd want to tick him off by, kind of upstaging his Olympic Games. So, from a political standpoint, it wouldn't make much sense that would happen before the end of the Olympics. But after that's over, it could be any moment, and especially since there's kind of a timeline there where Russia wouldn't necessarily want to attempt to attack in the spring when the ground starts to thaw and the the terrain is more muddy and things like that. So you've got a 3 or 4 week window there where after the Olympics and before spring starts to hit that would be ideal if they're going to do it. Now, again, this all could just be talks or pressure to get talks underway for things that Russia wants. But to me, I just can't see a country spending all that time and money moving troops to the border and then not doing anything. So I would have to think that's kind of inevitable, and that's the way I position myself with some of the trades I'm in. The oil trade being one is based off of that. Now, oil did move lower today, which is a little bit surprising. With the you don't necessarily expect that it has to go up yet because nothing has taken place, but you would expect at least it might show a lot like the candle today of the S&P, where it's more indecisive or flat in anticipation that those prices could spike. But it was down pretty good. At least the oil stocks were. Oil itself was up, and that's again another thing that's kind of confusing is a lot of the oil stocks were down, but oil itself was up. So we'll see if today's sell-off in some of those oil stocks is temporary, or if we are going to see oil itself start to come down. Which again, I just don't expect it to with the until this conflict is there's a little bit more clarity on the conflict there. Now there are with the, like I said, the candles day on the S&P is indecisive. You match that up with Friday's pretty decisive move down, spike in the VIX, which we'll see here in just a second. You would anticipate the market is more likely to move lower and possibly retest those January lows, which we've talked about a number of times. But, and looking at the chart as well, you could make an argument that, here's an impulsive move up. This is maybe wave A, B, C of a bullish ABC pattern. Now, if today's price action looked more like a hammer, then I'd be maybe more inclined to assume that maybe that was a bottom and we're going to rally up from there. But the fact that we did try to rally and it failed, and it's more of a indecision candle as opposed to a hammer, I'd still say there's probably a greater probability that we see more downside. And also, considering the market reaction when that news broke, if there is any further sign that Russia is going to move, I think the market has already shown that it's likely to react negatively to that or sell off on that. And so I just can't see any reason for a strong rally right here. But that doesn't mean I can't flip flop and change my mind if I see it in the price action. But just want to point that out, that although things are still looking more bearish and I would lean more towards the downside, I haven't ignored the fact that maybe this could be a possible bullish ABC pattern. And if we do start to rally, then that would make a little bit more sense. That pattern would make a little bit more sense there. The other charts are very similar, not too much of a difference in those. NASDAQ 100. It had again, an indecisive candle today, very, very similar looking. The Dow, or did we skip the Dow? Let's go back. We did skip the Dow. Here's the Dow chart. Same thing. And then the Russell. The Russell, it had an indecision candle. It also wasn't down very much on Friday. It's actually held up pretty good. But in looking at the bigger picture, I think I pointed this chart out last week that this looks like an impulsive move down. This looks like it could be wave A, wave B, wave C, a bearish ABC pattern, which would make it more likely that we would move lower. Now you say, well, could it be that this is wave 1, wave 2, and this is wave 3, and this is wave 4, and we're going to go higher? Well, that can't be from an Elliott wave standpoint, simply because we've already traded in the territory of wave one. And one of the L8 wave rules is that wave four can't trade in the territory of wave three. So that can't be a wave four, which makes it much more likely that this is a bearish ABC pattern and that we're going to end up heading lower. Again, we'll see if that plays out that way, but that's kind of the way I'm looking at it right now. And now it could be that you get kind of a double correction where it does rally back up a little bit, but this is all still part of a correction, and then you finally get that impulsive move down. So near term, it's still hard to be able to forecast where the S&P and where, in this case, the NASA or the Russell 2000 could go, but the shape of the pattern right there would be, again, cause me to lean more towards being a little bit more bearish in that context. Bonds, we talked about in the last stock specific class that bonds were getting extremely oversold. We did get a little bit of a bounce on Friday off of that, back down again today, but again, I would still point out that we're in that extreme oversold condition. Could there still be downside? Yes, but from a probability standpoint, we're probably closer to a bottom here. More likely that we get some sort of a more significant bounce or move sideways at least to alleviate that oversold condition. So I definitely wouldn't be one to short bonds right here, but to say that they still couldn't move a little bit lower, that's still definitely a possibility. But the trend is definitely down in bonds, and we'll see if that trend changes or at least consolidates a little bit here. Gold had a big spike up on Friday, a little follow through today. I've told you that for the most part, gold has been in a range, and we haven't spent much time on it. But if we back out, look a little bit of a longer term chart, we are kind of possibly breaking out, and we're moving to a higher high for the first time in quite a while. Maybe there's going to be some movement now. You can see some higher lows right here in gold. It's possible that maybe we are finally turning the corner and could be starting to break out. This is the next target up here we'd want to look at to see if it breaks out above that and gives another higher high. But I think with the movement of gold off of that news on Friday, it would show me that that gold is sensitive to that event, and so I'd expect gold to probably spike up even higher if and again invasion takes place. Also worth noting though is that we are at the far right side of this extreme reversal risk, so it has moved up pretty far, pretty fast in a short amount of time. Could pull back a little bit or move sideways to consolidate that. That's always a possibility there, so that's something we'll keep an eye on. But gold looks like it's finally moving, at least it's finally worth talking about. Oil, you can see, continues to move higher, and although those oil stocks, individual oil stocks sold off in a pretty decent way today, oil continues to move higher. USO closed higher again. I would expect that trend to continue just based on everything that's going on. Clearly an uptrend. I expect that to continue to move up. And it's not yet in that extreme reversal risk range either. So it is showing that there still could be some more room to the upside there. The dollar. Now the dollar, I pointed out a possible trend reversal. It broken out to a new high right here. A sell-off, impulsive move down right through here. Was consolidating a little bit, which would indicate that it's likely to continue to move lower. But the last couple of days, it's moved up a little bit higher right here. Now you can get that sometimes off of a sideways move. I've talked about that a number of times. Well, it happened right here. I can't draw any straight lines here. You had this long sideways consolidation. It dipped down quickly and then broke up sharply. The opposite could be happening here, where it was moving sideways. Maybe it has a sharp move up followed by a sharp move down. We'll have to keep an eye on that because it could be that the dollar is starting another impulsive move up or a significant rally. we'll see how things look in the next update. Today, you could characterize as a little bit of an indecision day, though, a little bit of a doji or spinning top candlestick formation. We'll see if that starts to lead to a drop in the dollar. If so, that would, again, fuel more of a rally, continued rally in oil and in gold, since there tends to be an inverse relationship there. And we'll see if that ends up taking place. The VIX, I talked about how it spiked up on Friday, pretty significant spike when that news came out. Now today it also was up pretty high early, faded a little bit into the close as the market initially really kind of sold off when more news came out today. But then came off those lows a little bit, and VIX has a little bit of a bearish reversal candle. We'll see if that leads to a pullback. It would pull back a little bit if the market were to rally, but volatility definitely picked up. And usually when volatility picks up again, it usually means it's a little bit more bearish. It could lead to more downside. We'll keep an eye on that, though. But it is worth noting that spike on Friday, reflecting that fear was coming. A little bit of fear was coming back in the market. The Semiconductor Index had a big drop on Friday. Had a big drop on Friday here. A little bit of an indecision day today in that candle. But again, this looks very similar to the market ETFs. And again, this is looking more and more to me like a bearish ABC pattern that's setting up for another move down. I wouldn't be surprised if we, at the very least, retest those January lows. That's something to keep an eye on. Dow Transportation Index. Now, this is very similar to S&P 500 chart, where although I had that big down day on Friday, you could make an argument that this was a little bit of a bullish ABC pattern right here that maybe could lead to a rally. But again, I tend to, with today being an indecision day, I would tend to lean more towards the bearish side until I see more evidence of buyers coming in. I really haven't seen any strong buyers, especially on individual stocks. Either I've seen indecision in those patterns or a lot more bearishness in those patterns. And again, that can change very quickly, but we're kind of in one of those areas again in the market where there are arguments where it could go either way, and not a time to be overly aggressive with trades in either direction in that type of environment. Bitcoin, it showed a little bit of a drop here the last couple of days, although the Bitcoin futures or the commodity trading of Bitcoin, we don't have a live chart to show that on Traders Pro, but it was up a pretty sharp, a pretty good amount as of right now. It's the time of this recording, so it could be that we see this move up tomorrow and see Bitcoin maybe continue to rally. Now, Bitcoin is and that would make sense if it does that, because Bitcoin has been thought of as being another alternative to gold in times of uncertainty, where people kind of move there as a defensive play. With gold kind of rallying, it would make sense if there is a little bit more of a movement up in Bitcoin, if especially as other countries hedge a little bit their currencies with some of the uncertainty of what could happen with Russia and Ukraine. That could lead to maybe a little bit of a spike in Bitcoin. Again, I'm not a Bitcoin expert, but anyway, that's what I saw in the chart before I did the update, was that little movement up. We'll see if that is reflected tomorrow on GBTC, which is kind of a proxy way to look at Bitcoin, one that we could look at. It mirrors the movement of Bitcoin pretty closely, so that's why we use it as a chart to in the update here. All right, so that's basically the market update portion. far as individual trades, as I mentioned in some of the previous updates, really the only sector I really trust right now was some of the oil stocks. But with the way they moved today, we can see in the portfolio here, a lot of them had a pretty sharp sell-off here. Let me pull up stocks I'm holding right now. You can see Marathon had a pretty good drop, about a 4.5% drop. Halliburton, about a 3.5% drop. And again, you compare this to the USO. The USO went higher, and these are selling off. Devon, 3.5% drop. Murphy, about a 2.5% drop. I mean, not massive in any way, but it is kind of odd that we would see that that opposite move. We'll see if that's just something that's temporary. Haven't hit stops yet, so I'm not don't have plans to stop out of those just yet. But we'll see what happens in the next couple of days. And with everything else I talked about and some of the uncertainty there, I'm not gonna go over any specific patterns today. We'll see if Thursday's update there'll be ones that I would want to get into or at least go over. That'd be the main class to do it, the stock specific class. That's where we usually go through that anyway. But I would kind of hold off on getting into too many trades just yet until we see a little bit more clarity. Because as of everything I've been talking about so far in the update, I would lean more towards a higher probability of downside in the near term as opposed to upside. And again, there's still, I think that uncertainty will be there through the end of the Olympics. Maybe we see some whipsawing until then, market attempting to rally and then rolling over and going down again or things like that. So in the very near term, it's hard to predict day to day what will happen. I think the S&P futures at the time I'm doing this update were up just a little bit, but not enough to assume that the markets will open higher tomorrow. But I just think it's a time to be cautious and to be careful and not overcommit capital just yet. The way things are looking, at the very least, at some point in time, we should probably retest those January lows. And if we're going to do that, again, there's no reason to be overloaded in individual stocks until we put in a little bit more of a tradable bottom. And I just don't think we're there yet. All right, thanks, everyone. Have a great evening, and we'll see you Thursday for the stock-specific class. Thank you. Bye now.